If you look at money growth from one year to the next, it has been negative for at least a year and a half. The amount of money is a leading sign of inflation. We also think that inflation will go down a lot more than people think it will. I don't think it will go down, especially if the customer is afraid about losing their job, whether it's because of AI and automation in general or something else. That's why people tend to save more during those times. We think that will mean businesses will have to set their prices even lower. As of Friday, the US Labor Department said that businesses added 254,000 jobs in September. More than 100,000 jobs more than what LSEG economists thought would happen. It also went down to 4.1%, and the number of jobs gained in July and August was changed to reflect that. In July, the number of jobs added was changed from 89,000 to 144,000, and in August, it was changed from 142,000 to 159,000. After the report came out, longtime US economist and Treasury Secretary Larry Summers wrote on social media that the jobs report shows the Fed made a mistake when it cut rates by 50 basis points in September. According to his post, the employment report released today backs up our thoughts that we are currently in a high neutral rate situation, which means that rate cuts need to be done with care. The 50 basis point cut in September was wrong, but it wasn't a big deal now that we know what we knew. For this reason, the Federal Reserve has to be ready for both a soft and a hard crash. Nominal pay growth is still much higher than it was before COVID, and it doesn't look like it's slowing down. Analysts say this is the first time since May that the jobs report was better than expected. Like in the summer, many people are wondering if the Fed's 50 basis point cut was too big. The report on jobs that was better than expected has also made the market less optimistic about more rate cuts. Before the Labor Department's report came out on Friday, there was a good chance that rates would go down by 50 basis points next month. The chances of a 25 basis point cut in November, on the other hand, have risen to over 90%. Cathie Wood, founder and CEO of ARK Invest, recently talked to Bloomberg Television about her thoughts on the Fed rate cut and the jobs report. She also talked about what she thinks the US economy will be like in 2025 and beyond. But Cathie doesn't agree with Summers. She thinks the Fed is on the right track because fighting inflation isn't the main goal anymore. Let us show you parts of the conversation. If you like this video, please subscribe to the channel and set your alerts to receive more videos like this. Thanks for the help and have fun with the movie. Do you think it was a bad idea for the Fed to lower interest rates? Not at all, not at all. It's been interesting to see how economic activity numbers have changed over time. Up until this report, job numbers had gone down and were much weaker than what was first reported. When we look at earnings reports and see how much money they made, we see that a lot of companies had negative sales. It's important to note that recent changes in personal income due to transfer payments, government stimulus, and surprisingly dividends have had a big effect on the top numbers. But if you look at the business, the part that goes through cycles is sick. It's bad. Take a look at. One part of the economy at a time has been going into a recession, no matter what the big numbers say. When the government started raising rates, housing prices dropped right away. We're down 20 to 40%, but that is still a slump. You have non-residential construction and cars both in a recession. Not strong at all. Cathie, I know that number looks at the past, but what do you think about the salary report from today? In September, 254,000 new jobs were added to the economy. It doesn't look like that's a slump. Team, please wait for me to finish. I'll do that in a minute. That's the big groups. Next is the small and medium-sized business group. Their confidence level is between 8 and 9, and some price controls, especially the ones that are based on cycles, have actually made prices go down. One thing that I think is helpful is that prices are going down, which means that people are getting better deals and spending more. That seems like it would last. A lot of people say that inflation is caused by real growth. Price cuts have usually led to more business, both in this case and in the past. As long as the job market stays strong, and today was a good day in that regard, consumers should either expect bigger discounts or lower prices from stores like Walmart, Costco, and automakers. I think there will be activity and the job market will stay strong. But if they try to raise prices again, it was interesting to see FedEx say they are going to use prices to make up for the fact that positive revenues one year and negative revenues the next. I believe that will not work out. And I think that a lot of people will understand how negative the economy is over the next year. It's not always bad when prices drop. Part of the reason for this is new ideas made possible by technology. The prices of cars and electric vehicles are going down, which means they're also getting cheaper. It's hard to tell what's going on out there because of this, because companies can cut prices and still make money because productivity is higher than planned. If that lasts, that's great. Since the beginning, Cathie has been sure that the Fed's aggressive rate hike will cause deflation. She said that the Fed has cut rates too much, and now there is a chance that the whole economy will go into a time of deflation. The CEO of ARK Invest thinks that the best answer is for the central bank to cut interest rates quite a bit until inflation goes negative in 2025. Eric Bean is a partner at the Foundation Law Group and a labor lawyer. He agrees with Cathie that the 50 basis point cut was good for the US economy. Bean said that the bigger cut was because the job market was slowing down and more people were applying for unemployment. Now that inflation is under control, we want to deal with the other side of the Fed's mandate and make sure we are not tanking employment, Bean told Fox News. I think further cuts, probably more measured than a half point, are what's going to be needed to keep there from being a significant drop in employment going forward. Let's go back to Cathie's interview where she talks more about new ideas and how the November election will affect the growth of new ideas in the US. Our main goal is to come up with new ideas, and this past year, something very important took place. We were worried that too much control was keeping new ideas from coming to the US, especially when it came to crypto or digital assets. We had an inspector who was very hostile. I would say the same thing about the FTC's decision to block mergers and acquisitions (MA). This has stopped many new businesses from selling to larger ones and getting cash. Both candidates seem to be saying that those two jobs are up for grabs, which could be why. And more people agree that new ideas can help solve problems. And because of that, we shouldn't stop it. In that light, I'm glad to see the progress here from both parties. When it comes to new ideas, we'll always choose fewer rules. I do not believe that taxes are at all good for new ideas or the economy. That's why both sides will make us think. But what's most important is what stops people from coming up with new ideas. We believe that we are getting a better idea of what will happen at the CC and the FTC. Well, we've been studying AI for 10 years now. That's why we bought Nvidia so early. And of course, we've taken it down in most of our businesses except for the flagship. The next big play is something we've been looking for. And we still think Nvidia is a good stock. But we think the unexpected will happen in the software side of things. You already know that Palantir has a big spot in the top 10 for us, plus UiPath. It tripped up a bit, but it's back now. I also believe it will do very well as more people learn about how well placed it is. Private software companies, on the other hand, are likely to be the ones who gain the most. I'm also glad we have a startup fund.